Hello traders, Gary Wagner here, 10:43 in Honolulu, making it 4:43 in New York on Monday, 4th day of April 2022, and this is the daily report for gold and silver. We do have a modest gain in gold, climbing up currently about $13.30 at $1,937, roughly $8 above our entry point on our trade on Monday. We'll talk about that trade and also our two targets that we hope we can see achieved to exit in profits. Gold experienced a moderate upside move today, gaining approximately $12 and is currently fixed at $1,935.50. If you recall, on Friday, we did put a trade on recommending the initiation of gold positions in the June contract month, which is now the front month. That's what we are looking at. So we've got about $5 plus on the trade, our exit strategy, as well as our stop placement. This all occurred in terms of gold strength with dollar strength. Dollar gaining about 0.3%. It is at 98.965. It's at one of the highest levels we have seen in approximately a month. Silver came down just a little bit in terms of the pricing itself, 24.63, after factoring in today's decline of approximately 3 cents. Interesting price action in the gold market. And the interesting part is that there are both bullish factors as well as bearish factors working against each other at the same time. And what we're getting in terms of the result is a consolidation with gold trading in a very, very tight range. The range I'm talking about looks at a bottom at approximately 1892. We can see that there were a couple of occasions, both here and here, where we challenged the bottom. If we look at the tops, we also have a series of resistance levels by virtue of a few tops up here at about 1900 and call it $64. The other thing that I'm noticing is that when you take a look at a market that is primarily in a bullish uptrend, you will get predominantly green candles. You will get red candles along the way, but it won't be a typical alternating color, and you will have many more green candles than you do red. Now, considering that, take a look at recent price action, because what we have seen is almost an oscillation between green and red candles from current price points all the way back to the middle of March. You get 2 days down, 1 up, 1 down, 1 up, 1 down, 2 up, 3 down, 2 up, 1 down, and so forth. That tells me a couple of things. First of all, we definitely have resistance at, call it 1964. The other thing, and this is what I find most important, is that it does appear as though a base is being formed, which is where we entered our trade, because we see these series of points in time in which the bearish faction tested those price points, but they were immediately bought up. And the reason I can say they were bought up quickly is if you take a look at the length of these lower wicks. They're quite large. It tells me that as soon as price action went to those lows, you had the buy the dip mentality and bullish traders entering the market on the long side. The second thing that I'm noticing is we're getting an interesting mix between the 100, 200, and the 150-day moving averages. They are all moving apart, away from each other, and that also shows us strength within gold. As I said, we're currently in at 29. The market is 37. My initial target has got to be the level of $1,964 based on these tops here. If it can reach that and move above that, we'd have to look at a series of tops, and I really believe the next mark would be 2,000, but we're getting ahead of ourselves because before it hits that, it has to trade and close effectively above 1965. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.